Welcome to the Accountancy Learning AAT Sample Paper Debriefs. I'm Sarah, and in this video I'll take you through the Principles of Bookkeeping Controls, Sample Paper 2, Task 2. So this one is all about reconciling control accounts. Part A asks us to complete the following statements by selecting an option from each pick list. Reconciling a receivables ledger control account to the receivables ledger may identify errors in, and then we've got three options there. So we're reconciling the receivables ledger control account to the receivables ledger, so it's the control account to the subsidiary ledger. So this means it would identify errors in both the receivables ledger control account and the receivables ledger, because if there's an error in one of them, it means that they're not going to balance. An error in the receivables ledger will or will not affect the trial balance. Now what's important here is the wording, the receivables ledger. So this is the subsidiary ledger, not the control account. So if there's an error in the subsidiary ledger, it's not going to affect the trial balance, as that doesn't show on the trial balance. It's only the receivables ledger control account that shows on the TB. You work in the accounts department of a furniture manufacturer. The following customer accounts make up the receivables ledger at the 1st of April. And we can see that we've got 4 accounts there. There have been no sale or purchase returns during April, and no discounts have been given to customers. What is the balance on the receivables ledger at the 1st of April? So for this then, we just need to add together our balances. So because this is customers, we're adding together all of our debits. That's what our customers owe us. But we're going to take off the credit, because that's what we owe the customer. So we're going to add together 65,800, 31,200, 8,750 and take off the 280. And that gives us 105,470. Then we're told that the balance on the receivables ledger control account on the 1st of April is a debit balance of 108,200. Then it asks us what is the difference between the balance on the receivables ledger and the receivables ledger control account. So we're told the receivables ledger control account is 108,200, and the receivables ledger we worked out was 105,470 from the previous part to this question. And that gives us a difference of £2,730. Now we need to identify whether these statements are true or false. So a sale of 250 was posted to the wrong side of the individual customer account. This will result in the difference between the receivables ledger and the receivables ledger control account of 250. Now if this was posted to the wrong side, it actually means the difference is going to be 500, because you'll need to do a 250 posting to net it off to 0 to take out the wrong entry on the wrong side, and then another 250 to put it on the right side. So the actual difference between the receivables ledger and the receivables ledger control account will be 500, not 250. A cash payment to a credit supplier of £400 was recorded in the payables ledger control account, but was missed from the individual supplier account. The payables ledger control account will show a balance of 400 less than the total in the payables ledger. So we've got a cash payment to a credit supplier. It has gone in to the payables ledger control. but it hasn't gone into the individual supplier account. So because we've made a payment, it's gone into the payables ledger control account, so it's reduced that, but it hasn't gone in to the payables ledger. So the payables ledger control account is going to have a lower balance by 400 than the payables ledger, so that's true. A discount allowed of £50 was recorded as a sales return of £50 in the individual accounts. This will result in a difference between the receivables ledger and the receivables ledger control account. So this discount allowed then has been recorded as a sales return. So discount allowed reduces the amount owed, and the sales return would also reduce the amount that we're owed. This is said that it will result in a difference. Now it isn't going to result in a difference because both are there, but they're just in the wrong description. So it's been put as a sales return. It should be a discount allowed, but the actual effect of the transaction is the same. So therefore there wouldn't be a difference between the receivables ledger and the control account. A purchase return of £80 has been recorded twice in the individual supplier account, but correctly in the control account. The balance of the payables ledger control account will be £80 higher than the payables ledger balance. So purchase return, so this reduces the liability. It's been recorded twice in the individual supplier account, but correctly in the control account. So that means we've actually deducted 160 from the supplier account, but only 80 from the control account. So it means that it would be £80 higher. So that's true. HMRC is included as a supplier when preparing the payables ledger control account. So this is false. The HMRC liability is recorded in separate accounts. And then finally, to end this task, a discount allowed of £175 was posted twice to the individual customer account, but only recorded once in the receivables ledger control account. This will result in the balance on the receivables ledger control account being £175 less than the receivables ledger balance. So the discount allowed has been posted twice to the individual account, to the subsidiary account. So that means that there's been 350 discount posted to the subsidiary ledger, but only 175 in the control account. So it actually means that the control account would be higher because that's only had a discount of 175, whereas the subsidiary has had a discount of 350. So that would make it false because the question is saying that the control account would be £175 less, when in actual fact it would be more. So the key to answering these types of questions is really break it down and think about what has happened and what account is going to be higher. So what does the transaction, or how does the transaction affect those balances? That completes task 2.